welcome to another edition of Beyond the Bell. It is Tuesday, February 13th, 2024. It is a little after 60 seconds after the bell, which means it's time to go beyond the charts, beyond the news, and beyond the bell. And boy, what a day. Very, very interesting day in the markets. Now, we're going to get to the big picture in a minute. Some really interesting stuff going on in the 4-hour chart, especially in the NQ, so we're going to talk about that in about 30 seconds. But a day like today, okay, when I first started trading, I'd look at a day like today, and I'd say, oh, yeah, this is the day where you make a lot of money, right? But when the ranges are big, our ATR is big, our standard deviation bands off of VWAP are huge. At some points in the NQ, there were over 100 points, whereas like 30 to 40 is considered normal, right? And our ADD is giving extreme readings all day. The VIX, welcome to the party, VIX. The VIX hasn't woken up for weeks, and all of a sudden, I think we finished. Let's see. Yeah, we finished up near 15, and we were up closer to 18 at some points today. Definitely, again, bringing the VIX back to the party. But just because a day has these huge ranges doesn't always mean it's actionable or always means it's tradable, right? I had a surprisingly limited amount of setups today. So yes, that can be, I took a couple trades, saved or had the day very green, but a little frustrating because I would expect a lot of trades on a day like today. And again, I still have to have setups, and this is something that I'm emphasizing on this show almost every day going forward. I trade when I have a setup. I had a couple of setups today, but didn't have any more, really, actually a little less than usual. And it can be frustrating watching the markets move quite a bit. But this is the type of day where the inexperienced traders are going to get whipsawed, right? Any sort of dumb money today is going to give that money to the markets. But first of all, before we talk about that and we talk about the framework in which we view the markets, let's get to the big picture. So, guys, very interesting day on the 4-hour. First of all, this is why we label these zones, right? This is why we label zones. This is why I have no idea why my cursor's jumping around. Let's get that off the screen, okay? This is why we label big zones. When we're talking about the 4-hour charts, right? We're talking about areas where price action can stay for quite some time. And I want to zoom out here because this yellow area is what we're going to be paying attention to, and it's just such a key area going into tomorrow, right? We talked about this on this show last week, triple top. I said the next time we head up towards this area, the probabilities strongly favor a push through, right? Almost a crash through that level, kicking the door down. Sure enough, it did. We consolidated in this area, then moved further up. Yesterday, a lot of this, I think, was just profit taking because we didn't have our CPI data yet. CPI data came out, and boy, you see, we actually hung around this area for a little bit. You can see a couple of candle wicks here. Prior resistance becomes support, so this was short-term support, and then it gave out. And now we're back down into this area. So two interesting things that I want to point out specifically with this chart, okay? First of all, our real body price action is still in this zone and still hovering around this 17,700 level, which is indicated by this dotted white line that has served as resistance, right? We poked up a little bit through it, but boom, 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 we couldn't get any divergence from the 17,700 level. Now, I said to one of the groups that one of my communities that I deal with every day, I said, for me to really accept this move out of this strong zone, I said this actually through here, I said I'd like to come down, test it, confirm the break, and head up. Well, we headed up even higher, but now we're right down here. Now, here's the interesting thing, guys. Pattern I like to call a multi-wick rejection, and the higher time frame, the stronger this pattern is. So I want to get down here and just look at this a little closer, since I know some people watch this show on phones. You can watch the show on a phone, never trade on a phone, especially day trade, right? So we ended up almost 150 points below this area at one point, and yet consistently rejected. So now what's next? Right? That's the question we all want to ask. What's next? So the longer we hang out in this zone without heading lower again, the more I think we favor moving back towards highs. Okay, I think we saw a combination of profit taking yesterday combined with spooking people a little bit on the CPI numbers. And so, well, what was the CPI and how does that affect what the Fed's? We don't care. We do not care. We know this with CPI. We don't care what any individual person thinks of it or what the talking heads on CNBC, Fox Business, Bloomberg, all those people. No, the only final authoritative voice in the markets is the markets themselves, right? So with this in mind, we've got a clear line in the sand down here at probably about the 600 level. I think if we head back down to this level yet again and hold, we could maybe retry that all the way down to the 17,000 level. But let's let it break through there, and then we can look at those levels as we progress throughout the week. But for me, again, the probabilities favor a hold here and a move back up, but the probabilities are only right as often as they're right. And there's a big selling tail here, big buying tail here, which means these last two candlesticks are really neutral candlesticks, right? They sort of oppose each other. So I'm not sure we'll get the type of volume and the type of movement overnight that we need. And even if we do, let's say we move down or up 100 points before we get to the New York Open tomorrow at 9:30 Eastern, we still have to confirm after the Open, right? We could head 100 points down before the Open, and then when the big boys come into the markets, they show up to play at 9:30. They may say no. We need to get this price action back up, so we're going to start buying here. Okay, so again, something to watch for tomorrow. And guys, this segues very well, and I want to get to this earlier in the show than I usually do. Our lesson of the day. Okay, and you don't need charts for this. This is something this is just us talking here for a couple of minutes, okay? So, technical analysis. What is technical analysis, right? Well, it's basically using price and volume data to create a series of indicators, right? And whether that is as simple as a candlestick, whether it's as complex as like an Elliott wave or whatever the case may be, right? 99% of the variables that go into a lot of technical analysis are price and volume, okay? So let's take a step back for just a second, okay? The markets in general are chaos, all right? Even on a slow day, the markets can be very chaotic, let alone on a day like today where we're getting 200-point swings in the NQ like they're nothing, okay? So what is technical analysis really when we break it down? Technical analysis is no more than a framework with which to view the markets, okay? So I often like to say that a trade to me is like I'm looking out a window, okay? And I'm looking at, let's say, a car on the street, and the car is my trade, okay? How clearly I can see that trade depends on a variety of things. It mostly depends on how clean the window is. Right? If the weather's nice, sun is shining, and my window's fogged up and a mess, I can't see the trade. I can't see the car on the curb. Whereas the clearer picture that I have of that, the more confidently that I can act. So with technical analysis, again, it is the framework with which we use to create structure in the markets. Okay, the markets, if you just saw, anybody ever just look at time and sales? I know some people use that, but just look at a time and sales one time, and it looks like a hamster it looks like 10 hamsters on crack and meth at the same time, and maybe they just pounded 10 Red Bulls, right? All over the place. Tough to make sense of that. Okay, but that is the raw data. That's showing you the trades in real time, as close to real time, depending on how far from the markets you are, as can be. Right? Thousands, sometimes per second. All right? That's chaos. So technical analysis is the framework with which we use to create structure for the markets. Let me give you an analogy for this. Our brains, our minds, very chaotic, right? There's usually, a lot going on up there, right? And then we have, people that have certain, mental disorders and mental health issues, which create a whole different type of chaos, right? It can be as simple as something like, what I've dealt with in my life, ADD, or it can be something as complex as schizophrenia and, dementia and things like that, right? So we have, how do we understand the mind? Well, we have the field of psychology, right? Psychology is our framework with which to create structure in what is a very chaotic mess up in our heads. And that's how we use technical analysis and trading. And in a lot of ways, they're very similar, right? Psychology is not perfect. Okay, one of my really good friends is a therapist. I've had some great trading-related conversations with him. he doesn't have time to get into trading. It's something he wants to do when he retires. But, he's read Mark Douglas's Disciplined Trader books and talked about some of the concepts in there and explained them a little more clearly. And we've had a lot of conversations about just sort of the willingness to kind of push through with trading and things like that. And, he'll be the first to admit this field is not perfect, right? This is not a this doesn't solve 100% of our problems, but it is a structure. It's a framework with which we give structure to the human mind. So that's technical analysis. In a world that is in its rawest form is nothing but pure effing chaos, technical analysis can give us the structure. And then it's just a matter of executing things based on patterns, executing things based on history, and executing based on our trading setups. And that really is it. Okay? So I really want you to think about that tonight. Technical, and we're all technical. If you're watching the show and you're a futures prop trader, you are a technical trader, right? Whether you're just watching the time and sales or the dome, or you're using candlesticks or whatever moving average crossovers, whatever funky stuff, you're basing that off of volume, volume and price. Okay, so that is creating structure in a very, very chaotic environment. Okay, so we've got a little stream thing going on today, guys, so I can't see your chat for questions or comments or anything like that, so I apologize if you've been asking them. So I will give you information on how to reach out to me if and when that particular when we get to those types of questions. But I want to get back into the charts because I want to look at things on a little smaller time frame here. So again, right, and just to give a little voice to this theory, or a little I guess pictures to this theory that I just talked about, right? The markets, again, this is VWAP. VWAP is what I use, one of the technical indicators that I use to give structure to a chaotic market. Okay, and you can see, whether up here before the markets, whether here, standard deviation bands, all this, the price action just ignored the technicals, right? And you're going to see that, guys. The fundamentals always trump the technicals. Okay, but we don't really have the weight and the volume and the access to information to be, and really fundamental traders are not at their heart mostly day traders, right? So in this situation, we're just left with the technicals. And you can see we did then basically right about here, unironically actually, no coincidence, that was my first trade of the day, began to respect the technicals all of a sudden. Didn't respect them here, didn't respect them out here, all this stuff. We don't, basically, as one of my fund trader friends said, and I'll give you the censored version, he basically told me one time, we're dealing with multi-million-dollar positions, F your little lines, right? And that's not what they use. But in this situation, we began to then respect the technicals, right? So we bounce off VWAP here, move below, break, retest, and go. This classic pattern, guys, that I talk about almost every day on this show. Break the price action, retest it. So what I was talking about with the 700, right? We came down to the to the 700. We've retested. We broke, retested, and go. That's what we want to see. We broke it. We created a new high, and now we're retesting. Do we give it up? Or do we keep going from there, right? Or do we go back up towards 18,000? So, and even as you can see, as we moved into the close, little after hours action, we're sort of stalling out up here, right about at the VWAP. Okay, standard deviation lines didn't play a huge role in today, and let's take a look at the ES. The ES had some pretty nice action today as well. So similar thing here. We, as we move past, because again, the CPI data came out at 8:30 Eastern. So the markets basically was the market open an hour early today, right? You can see that on the volume down here. If you were to just look at this, you'd say, oh, look at the volume, look at the price action. This is clearly the open. Well, no, it was an hour before the open. The actual open is right here. Okay, so we got basically an extra hour of trading if you trade in the morning. I don't typically. I don't usually trade very little before 10 a.m. Eastern time. But anyway, we began to respect VWAP. So we've kind of come back into this situation where the technicals are playing a role. Again, guys, I've said this. I know a lot of people tune in here or there when they can. Those of you that watch us every day, thank you for making us part of your daily routine. But in this situation, we definitely want to look at VWAP as we go forward. Some people use multi-day VWAPs. There'll probably be some traders, whether in stocks, whether in various futures, anchoring their VWAP to the CPI this morning and going from there. That's not something I do, but there are VWAP traders that essentially swear by it. So again, we talked about on yesterday's show. Yesterday was sort of a tale of two trading days. Okay, you had the first hour where nothing much was going on. Then we moved up and moved down. Okay, and in this situation, it's actually similar but sort of reversed, right? We had the first trading day, which started about an hour before the markets open, up to about this point, right, where we didn't really pay attention to the technicals, right? It's just pure, raw, unadulterated, unfiltered, X-rated price action, right? And so then as again, the initial volume is in, our indicators have adjusted, right? So I'll get to that in a second. So then we moved into this second trading day. We're sort of a little more normal trading. Bigger ranges, bigger ATRs, bigger dev widths, but still we move back into, again, a little more of a normal trading setup there, okay? And again, guys, one quick tip. Why won't this change? Come on. Okay. One quick tip with this, guys, okay, is that keep in mind if you use momentum-based indicators, right, and almost every indicator can be considered in some, but I'm especially talking about like RSI. VWAP can be one, right? The more volume that comes in, the more VWAP adjusts to that volume. Keep in mind that after a big event, CPI may not have been something we gave a crap about 4 or 5 years ago, okay? It's clearly in a high inflation and high interest rate environment something that's going to be very, very important, right? It's basically, earnings combined with the FOMC, combined with everything else, on steroids. Okay, so keep in mind those momentum-based indicators, and this is just another way of illustrating the point I was just making on the chart. When you have a big volume event, so volume goes from next to nothing to extremely high over the course of half hour with FOMC or CPI or whatever the case may be, you're going to see a lot of momentum-based indicators get thrown off. Okay, so again, just something to keep in mind as we go forward. So, guys, again, I apologize. I can't see the chat, so I can't, go off of what you guys were doing. But if you do have any questions for our mailbag, make sure you check us out. Or you can go to the Discord server, or you can just message me. My username on Discord is just Trader Matt. No dots or numbers or anything like that, just Trader Matt. I will never reach out to you directly or cold message you for anything, but you are welcome to message me and I will respond. You can also find me at my email address, matt@tiresiastrading.com. That's TIRESIS trading.com. So, guys, I think that's so what's next? So what are we looking for tomorrow? Well, we're going to see how the markets read and react overnight to this price action. I am personally, just as we sit now, my thesis and my bias is long going into tomorrow. I think we're going to push up over the 700. Now, again, we're not in. We can have a thesis, we can have a bias, but we're traders. We are not in the prognostication business. If you want that, go watch those bozos on the financial networks. Right? What we're in is the making money business and the trading business. So we can have a bias, but if I wake up tomorrow and we're down at 17,500, do you think I'm going to be long biased? No. Anything below 700 for me, I'm going to be taking starting tomorrow. Starting tomorrow at the open, if we're below 700, I will probably be short bias. If we're above 700 on 17,700 on the NQ, I will probably be long bias. But let's see what the night brings, right? So we'll see how, and more importantly, some of the followers of the options chains and the gamma chains and all that. Now that the options market is closed, it's going to be interesting to see adjustments in positions and adjustments in. We have VIX expiration in the morning tomorrow. VIX options expiration. We have normal options expiration on Friday. So I think it's going to be a great rest of the week as far as movement. Hopefully that movement is tradable and actionable. right? Like there's days where the market moves, the NQ, barely has a range of 50 points, but it's given us clear signals all day, and we can just sit there and take 30 points here, 40 points here, 25 points here. And I've had days like that. And then like days like today where we're, moving in 100 point increments, and there's just not a lot of setups. Okay. Granted, there's somebody out there whose setups made them a ton of money today, and there's somebody whose setups just got them creamed every time they got into a trade. So, again, we can look at days like today and assume, oh, it's this kind of day or it's not. But ultimately, all we can do is trade our setups, right? Like I have no idea, again, the old saying, I don't have any idea how many trades the market's going to give me tomorrow, how many setups it's going to give me. I can just tell you what I'm going to do with the ones that I get. So that's a great place to end our show today, guys. Thanks for tuning in. So tomorrow we will have a special Valentine's Day edition of the show. I don't know what that means. It's just going to follow our usual format, but it sounds fun to say, right? Like we need a trader dating app, right? I think we need, of course, that'll be like 80%, 90% dudes, won't it? So whatever. I'm not single, so it doesn't matter to me, but you guys have fun. Have a great rest of your day. I will see you back tomorrow on another edition of Beyond the Bell. Good night.